So my phone decided to run out of space before I was doing the video. So because of that, so I just went ahead and uploaded 4 or 5 things, which means 3 actually. I'm gonna make an entire video about the part that I was about to make at the end of this video. So if you were watching that video, this video, and you wonder what I was about to say, here you go. I'll probably link it or something. All we're going to talk about was relative value. This thing right here, super important. It's super key to everything. Relative value. So I'm going to make a whole video just about relative value. You ready? And just to start where I left off on the other one, I was saying, you know, people, it's supply and demand. There's a supply of money and a demand for it. And the demand for the money is in the form of people offering stuff for it. And they're going to compete for the money by making offers of more and more stuff. So eventually when those deals are closed, you know, there'll be this much stuff for so much money. And the less money there is and more demand there is for it, the more stuff people are offering, the higher the money's relative value is going to be. You know, per unit of money, there's going to be a lot of stuff offered for it. So per dollar, there's going to be a lot of stuff offered for it. And so you can say that that dollar has a high relative value. That dollar can buy a lot of stuff. You know, it's really just how much of this will you already want to trade for that. And that's pretty much the whole thing right there. But we can just explain it more detailedly. But yeah, this was a good video. So if you haven't watched it, go watch it. It's pretty good, highly relevant. I was just trying to, actually what I was trying to close on was actually what, if I trade this pen for what can I trade it for? That's already a concept I hope you guys understand. But relative value is a very high, I feel like it's more important. I feel like it's super important. I'm not gonna say it's more important because it's not, but this is super important to understand the changing values of money. So let's just get into it. I kind of just explained it right there. That should be enough, but I'm gonna explain it with goods and services and I don't know. We'll see what happens. This might be a really crappy video. You might have just learned everything you need to know in the first 5 seconds. Who knows? Let's see. So anyways, you know what? Also, I'm just gonna add it since I forgot, or I didn't forget, but since it was what I was actually trying to say at the end of the last video. It was simply, if I trade this pen for $1, who can I trade the dollar to? Anybody's wanna trade their stuff for the dollar. Pen for gold, same thing. Anybody's wanna trade stuff for gold. Pen for silver, same thing. Yen, same thing. So with every type of money that I trade my stuff for, there's a certain group of people, you know, that, you know, I have the option of trading it to, you know, a certain group of people that want to trade their stuff for it. And with any type of money, there is that group of people, and its value will be determined by this function of supply and demand, which I am about to get to. So for any of these types of monies that people use, there's a certain amount of it, or really an amount of it that's available, you know, and there's a certain amount of demand for it, people that want to trade their stuff for it, so it's going to have a certain relative value. Important stuff here. I'm not sure anybody's identified this stuff in economics, to be honest. Look, I gotta be honest, I learned a lot of this stuff studying, I gotta be honest, you'll probably think I'm silly for saying it, but I learned a lot of this stuff studying cryptocurrencies, studying investments, and I was trying to figure out how do these cryptocurrencies get their value. So I started studying that, and I was like, oh, supply and demand, oh. And I'm like, oh, yeah, well, there's I don't know, I realized the same thing happens with money, it happens with everything. Because supply and demand function plays into everything. You know, I mean, I don't know, let's just get into this. Relative value. So relative value, obviously I could have probably left that, but I want to put it in the middle. So I'm going to put it in the middle. What was that crinkly sound? I don't know. This is the thing I like to, I'm going to put the G for greenback, or that's greenback for me. But anyways, so you got goods and services. You actually just put that thing too. So yeah. Let's explain this simply. For any given good or service, you know, a certain amount of people that want it, right? So if they want it, what are they gonna do? They're gonna trade for it. So what are they gonna trade? If we're working in a monetary system, they're probably gonna trade money for it. So certain people with any type of money that want any type of good and are willing to trade their money for that type of good. And also, there's a certain amount of people with any type of good that are willing to trade that good for that type of money. So, I don't know, it's like a little percentage, part of the pie that has money and wants that good, part of the pie has it good and wants money. So with that, those people are looking to make deals with each other. But the thing is, there's usually more than one person who wants that good, or more than one person has a good that wants money. So they're going to compete. How are they going to compete? Well, it's a two-way thing. They both want what each other wants, or each other has. People with money, they want the good, so what are they going to do? They're going to offer money for it, try to get a deal. That's what they're going to do. These people with the good, they're going to offer the good to try to get money. You see what I'm saying? So they're all just they're competing for deals. You might not see this like directly in every single, you can go to like different countries. I think they still do haggling and stuff. You can see it right off the bat. But either way, that's haggling. Haggling, pretty much the same thing. Supply and demand, competition. Haggling, if you go to like one of these little flea markets, I got some money. They're like 30, you're like 10. Like, no. 15, and you're like 14. You make a deal. That's how much you have the money, they have the stuff. They're trying to get as much money as they can for their stuff. You're trying to get as much stuff as you can for your money. That's what happens all the time. And when these deals are established, let's say you get a pair of shoes for 14 bucks, a relative value of your money to those shoes is established. And thus, you could say that these shoes are worth 14 bucks, or 14 bucks, so you're worth the shoes. Okay. That's really what's going on. It's haggling, it's establishing a relative value. So in the economy, there's a bunch of people with money that want any given good. You can have bigger groups. You can say specific type of shoe, Nike, Air Jordan, number 3s. Okay, you can go that far. You can say in general, there's this many people that want shoes, and there's a certain demand for either of those. And at the same time, there's a certain amount of people that have Nike Air Jordan number 3s, or just shoes in general. So with that, there's a certain amount of those people that have those that want money. And thus there's this supply of both. They both are the supply of what each other wants, and there's a demand for both by way of people offering what they have in trade. All there is in the economy is trading. So we can just skip over money right now. That's just what it does with money, and I just kind of explained the function of money. If I trade this for any type of money, you understand that? We can just go to goods and services right now. I'll erase this. I'll draw it in a second if I got to. But for now, we can just go to goods and services. Let's talk about a barter system, which is just trading. You might as well say we are in a barter system, just with money, if you can say that. But so goods and services do the exact same thing. There's a certain amount of people with this good that want. You can't even let's just put stuff and stuff. It's easier. Stuff and stuff. So there's a certain amount of people with this stuff that want that stuff, a certain amount of people with that stuff that want this stuff. Whatever it is. Nike Air Jordan 3s, silver necklaces. I don't know. Either way. So if we're in a barter system, there's going to still be a certain amount of people that have something, and a certain amount of people that have something else that want that something, and a certain amount of people that have that something that want what this guy has, and a certain amount of people that has what, you know what I'm saying? Does that make sense? Does that make sense? I don't know if that makes sense, but you know what I'm saying? So a certain amount of people that have something that want what this guy that wants this stuff, certain amount of people that have this stuff that wants this stuff, and thus there's going to be the same type of competition. So they're going to be competing with each other by what? Offering more and more of their stuff for each other. So these guys are going to be offering more silver necklace or silver, or they're like, oh, mine's better or whatever. These guys are going to be offering more Nike Air Jordan 3s. It's going to be like, mine's are limited edition, fresh, And they're going to be looking for the best deal. In the same way, with all that competition on either side and deals are struck, there's a relative value established. So let's say you trade a pair of Nike Air Jordan 3s. Don't sue me, Nike, please, thank you. For a chain that's made of this pure, this much silver chain, whatever you want to call it. There's a relative value established there. So you can say, this much stuff is worth that much stuff, and it's established. This much Nike Air Jordan 3s are worth that much gold chain or silver chain. You see what I'm saying? Okay, that happens with anything. It could be freaking corn and milk. It could be whiskey and vodka. It could be anything. That's barter system. It's the same thing. There's a certain amount of people with either one that are competing for that want what the other person has, and they're competing for the deals with each other. And thus, when those deals are met, relative values are established. Or when those deals are made, set in stone, done, transacted, relative values are established. And so for any of those, there'd be this much stuff, that much stuff, boom, relative value. You can see the same thing in the stock market all day. Money for the stock. You can see it charted all day, every minute, literally. The deal, it's haggling all day. It's haggling. That's all it is. Supply and demand is haggling. That is all it is. That's all there is. I mean, the entire economy is trading. Okay, even with money, it's I don't know. The entire economy is trading. It's all haggling. You can see it charted every minute to minute on the stock market with any given stock. There's this much stock, these many people with the stock that want to trade for money, these many people with money that want to trade for a stock. And those deals are, people are cutting deals. They're haggling. Boom. They're all doing it electronically, whatever. Same thing is happening all over the economy. If you're going to a grocery store, you see the price of milk, you're like, dude, no way. I'm not going to pay that much for milk. So you go to the next store and buy it cheaper. Eventually, this store will probably drop their price because they want some business. You know what I mean? So you got money, you want milk. People who got milk, they want money. Same thing, supply and demand. Relative values established. You say no to this guy, you go to the next store, that guy, boom, same thing. Eventually, this guy will drop the price, and the relative values change throughout the day. You can see it all day. So let's do one more thing with this before I erase it. Let's go back to the money. So we talked about how stuff can have relative values to each other. Look, I didn't learn all this through studying cryptocurrency. I just kind of had a couple of epiphanies while studying cryptocurrency. I understood economics for a while. I just want to throw that out there. It wasn't just like, oh, cryptocurrency led me to all this. No. But it did in large part, studying the cryptocurrency markets and trying to figure out how I was going to invest in them, but I want to make sure I wasn't going to just lose my money. So I was like, okay, let's make sure I know what I'm doing here. So I studied I thought about it pretty deeply. I was trying to, figure it all out, and here we go. So yeah, before we get, just watch. So we talked about stuff to stuff, okay? So let's say Nike 3s, silver chains, they have a relative value to each other. I don't know, just one pair for one chain. Okay, now we're using greenbacks. Okay, what's it gonna take to get a pair of, naturally, if these have a relative value to each other that's already established, I should be able to get one pair of Nike 3s or Jordan 3s, whatever, for one silver chain for about the same amount of money. That would be logical, right? That would be logical. But, it could be. So let's just say that. 20 greenbacks. 20. I don't know if that's what the greenback symbol looks like. Let's just put 20 G's. It's a little bit better. So yeah, let's say for a pair of Nike Air Jordan, whatever, 3s, boom, 20 grams, boom, chain, the same chain, 20 grams. That means that, it could mean a lot of things I really don't feel like explaining. I could explain it, but what this means is if you didn't have this transaction right here, and you knew that you could trade one pair for 20 grams, you could trade one chain for 20 grams, you knew that these were about equal value because of their relative value established to the money. You know that, essentially, you know what I'm saying? Though you don't, not if you're gonna go to the guy with that, he might not want your Nike 3s as much as you want his silver chain, so you might get a crappier deal, you know what I'm saying? But, generally speaking, using this, since let's say we're in an economy and we're just assuming that this economy all uses this. Okay, when I say an economy, I mean this group of people that use this thing as money. Let's say we're in the greenback economy, right? So since everything in that economy is being traded for the money, everything's gonna have a relative value established to the money. And thus since everything has a relative value established to the money, you can kind of use that relative value to the money as indicator of things worth towards each other. You can say that's the price of things. Price is, like I just said, in the grocery store, they'll set a price. You have the choice of buying that or not. You go to the next store and get a cheaper price. That's really just a non-direct haggle right there. Like, an offer. They're making you an offer of how much milk for how much money. You know, it's still haggling. It's just non-direct. It's not, you know. So since everything's being in any given economy, any group of people that uses something as money, since everything's going to be traded for that money, everything will have a relative value established to it, and thus they will all, you can kind of gauge their relative value to each other. And you can call that prices, but that's not really what it is. I mean, it is what it is, but it's not really, because, you know, like I said, there's deals all over the place. You can find deals. You go on Craigslist and find deals. You can go to the flea market and probably find some Jordan 3s for 10 grams or 10 greenbacks, whatever, you know. Relative values. But generally speaking, since, like on a large scale, you can pretty much kind of gauge things general relative value to each other by using this as a translation factor. But at the same time, you know, you can probably find a deal, you can probably find a cheaper deal between anything, or you can, I don't know, there's stuff like that involved. Also, money has relative values to each other, so I could get into that. We got this. Y'all get it ready? Is that enough? Is that enough to explain the whole idea to y'all? I think it is. And I was talking earlier about the supply of it. You know, that has to do with, it's all pretty much implied, is it not? The supply, you know, I think I explained enough. But also, let's just throw a different type of money down here. Big G for gold backs. I just made that up. You know, so these will also have a relative value to the stuff. Same thing, Jordans and silver. Let's say it's 10 big G's, right? Get you a pair of Jordan, get you a silver chain, right? And, you know, that should mean that these have about that relative value. You know, if everything in this economy has a relative value to this, then you can kind of gauge based on, okay, 20 grand or 20 greenback, I keep saying grand, I feel like that. 20 grams for Jordan 3s, 10 big G's for a Jordan 3, pair of Jordan 3s, you know, you can kind of gauge the relative value of the monies to each other as well. And those are, I mean, if you just do it like that, that would be a floating exchange rate. Sometimes people like to try to, like certain countries, they'll like manipulate their money to where like you can exchange like, so I'll just explain this since I'm already on it. If 20 greenbacks could buy you a pair of Jordan 3s, 10 of these could buy you a pair of Jordan 3s, let's imagine you could trade, I don't know, I have to figure this out in my brain. Let's say that these have a equal exchange rate. You could trade 20 big G's for 20 greenbacks, little G's. What does that mean? That would mean that if you had 20 of these little G's, you can buy one pair of Jordan 3s, but if you traded for 20 of these, if that's what they set the exchange rate to, guess what? You can buy 2 pairs. That's what a lot of countries do to increase their business. You know, so a lot of people say China has labor is cheap in China. It's really this. It's really monetary currency manipulation. I can't say that. Actually, I don't know the specific details of China. I gotta be honest, but countries can do that if they want to. People can do that if they want to, and you know, that might be an incentive to get people to use some type of money, or just like I said, increase business. You know what I mean? If that's just how it goes. That's relative value. So that's relative value. So you can use, like I said, I mean, there's also the function of the supply of the money and demand for it. The lower, I already explained at the beginning, the lower the demand, the more, I mean, the lower the supply, higher demand, the more stuff per unit of currency, you know, that's happening in there. So don't forget that part. But, you know, that I guess that explains it all. Do I really got to recap it or anything? I don't think so, you know. Relative value is established. Since everybody's trading their stuff for money in any given economy, you know, everything has a relative value to that money, and thus you can kind of gauge their relative value to each other based on their relative value to the money. And likewise with this. And you can gauge the relative value of money to money And you can also find cool deals in there, like by doing, they call that arbitrage in some places, arbitrage. But also, you know, it's all just trading. Everything in the economy is trading. You can trade stuff for stuff. You can trade money for money. You know what I mean? You do all that. It's all just trading. You have what you got, you can trade it for anything you want. That's what it is. And like I said earlier, if I trade this for $1, who can I trade $1 to? Anybody's willing to trade stuff for $1. Gold, same thing. Silver, same thing. Any type of money, same thing. If I trade it directly, you know, so that's the reason you trade your stuff for money, because you want to be able to trade it to anybody else that's willing to trade their stuff for that same money. If you trade your stuff for something else, if I trade the market for a different marker, I'm probably not trying to trade that market to anybody. I probably want the marker. You can do that as bartering. It's simple, whatever. But if I'm gonna trade this for money, because I want to use it, I want to trade it to somebody else for something that they have, or I want to have it to have all the options. You know, to have, so I can trade it to anybody who's willing to that group of people that's willing to trade their stuff for it. And you know, certain monies have bigger groups of people, and there's more options for you. So if you want, so if you have stuff, I mean, but easily, I mean, you could think that, like, okay, well, if I'm gonna trade, I want this guy who has what I want, he only accepts dollars. Well, you could trade the stuff directly for dollars, or you can trade it for pretty much anything, and then eventually you just trade the money for money, and no problem. You know what I mean? It's not that big a deal. But that's all it really comes down to is you have what you have, what your good or service, your business, what you offer. Somebody has what you want. What do they accept? They accept big G, little g, Chinese money, dollar, gold, silver. You gotta get what they want. I mean, but you can still do business trading for Chinese money and then eventually trade it for gold or silver or whatever. You know what I mean? No problem. And I mean, that's just relative values, all established right here. And you gotta learn how to work this whole thing. I mean, like I said, there's arbitrage. You can figure stuff out. There's, you know, just stuff that you gotta understand. So that's always so. That's one thing. So if you want something and somebody, you know, you can still do business in one thing and trade to get what you want. You know, trade to get what he wants to get what you want. But also there's these relative values that change based on the supply and demand for them. So with any of them, with money, if there's a fixed supply and growing demand, that relative value of the money go up. And for Jordan 3s, if there's a fixed supply and growing demand, that relative value go up. Same thing with that and that. If there's a, did I say growing supply? I meant fixed supply. Fixed supply and demand going up? Yeah. Same thing. So if there's a growing supply and the demand stays about the same, it's gonna go the opposite way. It's gonna be a lower relative value. Also, if there's a thing that happens, which I think I should mention right here, but if it does go down in value, that's gonna make people want to get rid of it. And that's going to decrease the demand even further. And that goes into something that I call the investor cycle. That's something I kind of want to save to it's the investor cycle. It's when something's going down in value, people don't want to hold on to it, so they get rid of it. So if this increases the supply and its relative value starts going down, that's going to actually decrease the demand for it as well, which is going to like compound the effect. And yeah, eventually this thing will totally suck really bad, like nothingness. And the same thing with any of these. If they just keep creating a bunch of Jordan 3s, eventually they're not as hot. They're not as rare as they were. They're not like everybody has Jordan 3s, you know. Like, it's not as cool anymore, you know. And eventually people are like, screw Jordan 3. I don't want no Jordan 3. Same thing, silver. Same thing with any of them. Same thing. Yeah, the investor cycle. It's pretty much that compound effect. It's if it's decreasing in value, if its relative value is going down, they're gonna not want to hold on to it, so demand for it's gonna decrease. You know, the same happens the opposite way as well. If the value is going up, that might incline people. You know, it might be incentive for people to actually get their hands on it and hold on to it. It's the investor cycle, dude. It happens, and thus. I'll explain that whole nother video, but generally speaking, the value's going down, it's going to decrease the demand, and that's just a bad bunch of mojo. It's like a runaway effect. You can't really stop it at that point. You know, it just is what happens. And I guess that's relative value for you. Yeah. I'll talk about the investor cycle in a whole nother video. I was trying to save that for a course I was going to make on investing, but it looks like people don't believe that I got the real deal knowledge. So it's hard to kind of sell that. So I might as well just tell people. So yeah, that's part of it. I'll make a whole nother video about it. But and that is relative value. So hopefully you learn something. This is something you're gonna have to navigate. This is something you always have to navigate. Like with the dollar, if you're holding on to the dollar right now and it's decreasing value, guess what? You're not smart. You're not smart at all. You're not smart at all. It's just the same thing. The supply has increased. Its relative value is going down. It's going down. Just look at the chart. Its relative value is decreasing rapidly. If you're holding on to it, if you have life savings in dollars, you are a dummy. You should totally go away. And if you go to something else, guess what? You're going to be increasing demand of something else, and it's going to cause relative value to go up. And that's part of the end. It's something I call the money game. It's something that's always going to be, there's going to be changing values and everything. You have to understand how it all works. How it all works. I still want to sell courses because I can use it a little bit. This is my service that I provide. You know what I mean? Come on. Or at least somebody can donate some money or something. Patreon, can you be my Patreon? Kind of like the Kings used to support the artists and stuff back in the day. You can be my supporter of my stuff. This is my stuff. This is my stuff that I offer. I need to trade it for something. You know what I'm saying? Come on. I can really. It's my business we got going on here, right? Nah, but I think I'm gonna go ahead and share a lot of that stuff because I don't think it really is hard to sell courses until people know what's in the course. Once they know what's in the course, then guess what? You know, the course is no longer, you're already giving away secrets. So or whatever, you know. You call them secrets. It's just something I realized. Like I said, I was studying cryptocurrencies and I realized all this stuff. I'm like, wow, this is super highly valuable information. It's gonna give anybody a competitive edge over everybody else in the market, you know, in investing. And I was like, I could sell this. So that's what I was trying to do, but I don't think many people believe I really got that knowledge. You know, they think I'm just BSing. Nope, I got the real deal stuff. But that being said, I'll probably just let it all. I've already made a video on the investor cycle. I'll probably just, you know, go over the investor cycle and what I call the money game. Shit, the investor cycle is pretty much what I just said. When increase the supply, but you know what? I'll explain it. No, you know what? I'll leave this here. I'll end this video. I'm going to leave this here. I'm going to change the name. I'm going to explain the investor cycle. Just bear with me.